Hey, this is Chris Franco, and you are listening to Compound Money Quietly, the CMQ Investing podcast. CMQ investors, welcome to the show. It's great to have you here. In this episode, you are about to listen to my live response to a question I received yesterday about Alibaba as an investment. Now, my voice is a little bit better now, so you're going to hear my voice when it was probably at its worst. But I'm kind of glad we have this now on the record because everyone I know is sick with something, whether it's the cold, the flu, coronavirus. This feels like a moment in time, so I'm glad we're capturing that part of it. Let's get to it. We're on an IG Live right now, and this has been a question that's coming up. What do you think about Alibaba? I have a lot of thoughts on this. Now, remember, none of this is investment advice. You need to do your own research, but Alibaba is a company that I think is taking a bit of an unfair beating this year. So if you're not familiar, Alibaba or Alibaba Group Holding, BABA, if you're looking for the ticker, it's down about 50% this year. And so while investors were fleeing and selling their shares, I loaded up. So I'm pretty bullish on it. Now, I'm sensible about these types of things, but I look at this as potentially a really great long-term opportunity. I want to explain to you why. I'll also factor in some of the obvious negatives to this position because there's definitely risk. But let's get into it. So first and foremost, I mentioned this to everybody, but I've owned shares since 2018. That doesn't mean that I'm like the Alibaba expert because in 2018 my investing wisdom was a small fraction of what it is now. But regardless, this is something I've been in for a while. I feel like I'm not just like following the herd here because I know people got excited when Charlie Munger bought a decent position through the Daily Journal back in Q1. But so I've owned since 2018. The company is in my circle of competence, and I believe it has a competitive advantage. Now, so to determine, I'm going to read some from my notes here. To determine whether or not I should load up or if I should have loaded up more, I wanted to first assess why many shareholders were selling. And I think this is an important thing to do where you want to be able to consider, the both sides of the argument if you're going to have an opinion. So I just tried to absorb all the negative information and make sense of it. So from what I can find, and this is just my take, most of the fear about Alibaba has to do with China's government. Investors seem to be worried that China's government basically has it out for Alibaba. And, because of that, they will exert some sort of authoritative control to prevent the business from reaching its full potential. Now, if that's the case, yeah, that would concern me as a shareholder for sure. But these fears, from what I can tell, exist because China's regulatory watchdog came to the conclusion after a 5-month investigation that Alibaba was breaking the law. According to the New York Times, China's market watchdog in December began investigating whether Alibaba had broken the country's anti-monopoly law by preventing merchants from selling their goods on other shopping platforms. On Saturday, the regulator said it had concluded that Alibaba's exclusionary practices had hindered competition in online retail, affected innovation in the internet economy, and harmed consumers' interests. So the way I understood it was basically if you set up a store on, I can't say the names, it was like Taobao or Tmall, and then let's say you went over to a competitor to set up a store there, you'd come by to see that your store on the Alibaba store or the Alibaba marketplace was shut down. It'd be like if you were selling goods on Amazon, let's say you sold dog food on Amazon, and then you also do a deal with Chewy, and then all of a sudden your Amazon store gets shut down. That's what Alibaba was doing. Now, I don't have a problem with China's government saying that's not okay because that's anti-competitive practices. That wouldn't fly in this country. So I didn't to me, this wasn't like, oh my God, they're being so unfair. The other thing to consider is Alibaba, from everything that at least has been spoken about, they've already dealt with the worst of the government wrath. Now the government's going to look at other players in that space, or potentially could. So it's not like their competition is out scot-free. But it seemed to me from what China made Alibaba stop doing, these were things that I wouldn't think it'd be fair for any company to do. So now Alibaba lost market share because of this. But I equate this to, it's not a perfect analogy here, guys, but I equate it to like James Harden having to adjust with the NBA's rule change in terms of how players can draw fouls. Like James Harden is still James Harden, right? Is an exceptionally prolific scorer.
And this year his stats are a little bit down because there's a rule change that it was almost like made to stop him from getting some of the points that he was always able to get. Now, this year, will his stats probably be down a little bit? Sure. Next year, maybe. But assuming that he's got enough, playing time ahead of him and he's got he's considered to be, Harden's not the best example because he's older, and I admit that. So I have another example, but just bear with me for a second. But if you believe that James Harden or like someone like him will adapt to the rule change, I look at this as like Alibaba can adapt to the rule change. Now, the difference between Alibaba and James Harden is I think Alibaba has a lot more room left for dominance. So a better analogy might be Tiger Woods after he won the Masters in 1997.
Big money.
Now, when Tiger won the Masters, he won by the largest margin ever in the tournament's history. This is, this is one of the four major tournaments in the PGA. And after watching himself on tape, he decided to basically break down his entire swing and build it up from scratch. And after doing that for about 2 years and trying to, methodically perfect it, it clicked. And he went on one of the greatest runs in the history of golf. And I have some of the data here, actually. This is from an ESPN article. It says that it would be almost 2 years after embarking on a swing change with Butch Harmon in May 1999 that Woods would call the coach from the range before the GTE Byron Nelson tournament. Butchie, I got it. Over the course of that season, he would win 8 PGA Tour events. Before I continue, by the way, if you win 8 tour events, like in your career, you make the list of like most wins all time. Like, it's nuts. So he won 8 PGA Tour events. He'd win 9 more the next season, including a 15-stroke victory at the U.S. Open, the first of 4 straight major wins. And then he would, over a span of 7 years, make 142 consecutive cuts, perhaps the most unbreakable record in golf. He'd win 4 straight money titles and 5 consecutive scoring titles. So now these are not perfect analogies. I don't invest based on sports mental models, but I look at Alibaba as they're having to adjust to a new condition, switch up their style. They have to adapt. The environment's changed. Do I think they can do it? Or do I think it's more likely they'll adapt and figure it out than they'll just crumble under the pressure? Yes. So that's how I look at this. I think Alibaba's challenge is actually far less difficult than the one that Tiger Woods presented to himself in the late 90s. Alibaba doesn't need to tear anything up and build it back. Alibaba, it's like this dominant athlete that's just adjusting to a rule change. The statistics might be down for a season or two, but it's a temporary setback. That's just how I view the current situation. I recognize I'm ignorant to some of the business and politics situations in China, right? Like 100%. And that for me is the risk as an investor. But when I look at the other factors, which we'll get into, and I think about what my objectives are and what my time frame is, Alibaba doesn't seem that risky. So what's Alibaba do? Alibaba is primarily an e-commerce business. 87% of their revenue comes from what they call core commerce. 8% is cloud computing, and we'll get to that later. And then there's some other stuff, which I'm not even going to talk about because we don't have time. As an investor, I'm focusing on cash flow, free cash flow. How's Alibaba doing on that front? Well, Alibaba's annual free cash flow for 2021, at least when they last reported it, was $35.4 billion. And I'm using this in US dollars, by the way. This is not, it's obviously in a different currency, but I'm just trying to keep things on the same denomination. They increased their free cash flow by 49% year to year. They have nearly $80 billion in cash on hand. They also have one of the most valuable retail brands in the world, and that's according to the Global Marketing and Communications Group, WPP, and research that they did with the consulting firm Cantor. So what I want to look at then is how is Alibaba's management deciding to allocate that capital? Because that's ultimately going to determine my outcome as a shareholder. So here's what happened last year. So in 2020, Alibaba announced that they would invest $28 billion in cloud computing over a 3-year period. That was in 2020. This is before all this mess started. That would work out to roughly, it basically would be like they're doubling their yearly capital expenditures from where they were the previous year. And they're gonna maintain that pace for 3 years. And like I said, it's going into cloud computing. Cloud computing right now, Alibaba has the 3rd largest cloud computing company in the world, the largest in Asia. Now it's a long shot from Microsoft and Amazon, but it's, they have a nice footing. So the fact that they are investing aggressively into that part of their business to me is a good sign, but that's going to affect things like the net income in the short term. But again, as I said, how Alibaba's management decides to allocate capital is ultimately going to determine my outcome as a shareholder. So we know this company produces lots of cash. We know they're investing aggressively in a future line of business, in one that I think has, a lot of upside. In Alibaba, a couple other things I like about this company: extremely long-term oriented. They have they call it a 102-year plan because they want to be around in 3 different centuries. But the thing is with e-commerce, it's very difficult to compete in e-commerce if you're not large scale. It's a really crappy business if you're medium scale or smaller. It's very expensive. A business like an Alibaba, the commerce side of it, and that's just like a little nuance I picked up, over time. And the way I said this is an area like a core competence for me, because most people don't talk about that. They say, now all this competition can come in. I mean, they have 2 main competitors that are doing well, but there's still a lot of room here. And Alibaba has established itself as the leading brand, and I think there's something that's often overlooked about that in terms of loyalty and stickiness. And I just don't think this is a company that is going to just crumble. I think they have a lot of momentum, and they're just such a mammoth. Jack Ma is not running the company anymore either. And from everything I've read about their current leader, and not to say that I am an expert on the ins and outs of what he's saying, but I've read several of his interviews and just trying to get a sense of the person. And he seems like a very reasonable, sound thinking guy. And again, that doesn't mean you should invest or I should invest, but it's different than when you read something. If he was saying, tell the government, bring it on, he just was very just like even keel. And they're focused on the future. They're focused on innovating. They're focused on experimentation. I read this article that Warren Buffett recommended. He recommended back in the 80s it's called The Dinosaurs. And it's about these dominant companies that died and like kind of what caused it. And I go through that when I look at a company like Alibaba, and Alibaba doesn't exhibit any of the signs that these dinosaurs, so to speak, exhibited, like where they become complacent or they're no longer, playing offense and they're just in kind of like a constant defense mode. It's actually quite the opposite. So I look at Alibaba as still a company that has a lot of energy, very ambitious, long-term oriented, really healthy cash producer, investing in the future in areas where they're proven, where they can build out and win. And I think that, there's certain momentum effects that are, a little bit more qualitative and just frankly a little bit more obvious, and not as like, you don't need to do an Excel spreadsheet to figure it out. I think it's a franchise. Could I be wrong? Absolutely. But this company's down 50% this year because I think people are scared about a lot of things that they won't be scared about in 5 or 10 years. That's just my take right now. Don't invest on it based on what I'm saying. I'm just sharing the high level of my thesis, and I'll post this up as a podcast. Now, you probably want to know, how much does Charlie Munger own? We can go to whalewisdom.com and find that out. All right, Daily Journal. The top buys from last quarter, they only bought one stock. It was Alibaba. And by the way, Charlie Munger is the chairman of the Daily Journal. Their Alibaba position is nearly 20% of the portfolio now. Their estimated average price paid is $191. So currently Alibaba is at like $120. So not to say, again, I want to be very sure I make it clear, do not just invest based on this. I'm not giving you investment advice. You should not follow any individual into a stock. You should do it based on your own research and your own thinking. But, right now, if you're buying Alibaba shares, you're buying it for $70 less than what the estimated average price that the Daily Journal has paid. And again, this is 20% of their portfolio. So, and remember who Charlie Munger knows. One of his investing partners in close confidences is Li Lu. Li Lu, who would know what's going on in China better than anyone, probably, on Instagram. So that's my thoughts on Alibaba. I'd love to hear your take. By the way, if you haven't already, leave a review on Apple Podcasts, leave a written review, give a 5-star rating, share with a friend. All that goes a really long way, and I appreciate it. That's the best way we can help this content grow. We are independent. We are not on some big podcast network by design. So we want to do this from the underground up. So appreciate all your support.
Thank you for listening to episode 58 of the CMQ Investing Podcast. My name is Chris Franco. We'll talk soon.
Hey, Billy boy, get on the computer. Go get some Alabama quick. The professional investor says it's going to make us a lot of money. That's his investment advisor guarantees it.
Billy boy?
And Tiger Woods is in on it.
What?
Yeah, James Harden, I think. Come on, hurry up.
Man, you must be born yesterday. You think you're going to get rich doing that kind of hoopity-hoppity, skippy-dooping?
No, Daddy, look at the name. It's called Alabama.
Oh, my God, boy, this is destiny.
Billy, call the Ferrari dealership. Make sure my car gets ready. Special paint job. Camouflage.